First we will see for the long-term investment. Generally 3 to 5 years or longer will be considered as a long-term. For long-term investment, in the case of short time frame, a weekly or monthly chart can be useful for long-term investments, as it provides a broader view of price movements and trends over a long period of time. This helps investors identify long-term trends and potential buying opportunities. For short-term investments, it's important to consider market volatility and liquidity. In terms of short time frame, a daily chart can be useful for short-term investments, as it provides a good balance between analyzing short-term price movements and allowing enough time to see longer-term trends. The cup and handle pattern is a bullish continuation pattern that is often used in technical analysis to identify potential buying opportunities in a security. For finding the cup and handle pattern, the traders typically use daily or weekly charts. The pattern can take several weeks or months to form. So, using long-term charts allows traders to see the pattern more clearly. Traders can start by looking for a large U-shaped price pattern which represents the cup portion of the pattern. The price should then form a handle portion, which is typically a smaller downward price move after the cup has formed. For intraday stock trading, a 5 minutes or 15 minutes chart time frame can be suitable for many traders. These 5 minutes or 15 minutes time frame allows traders to analyze short-term price movements and trends that can help in making trading decisions. However, the choice of the chart time frame ultimately depends on the trader's individual trading style, strategy and risk tolerance. Some traders may prefer even shorter time frames such as 1 minute charts, while others may prefer long time frames such as 30-minute charts. It's important to experiment with different time frames and find the one that works best for your specific trading style and preferences. For intraday option trading, a 5 minutes or 15 minute chart time frame can be suitable for many traders. These 5 minutes and 15 minutes time frame allows traders to analyze short-term price movements and trends that can help in making trading decisions. However, the choice of short time frame ultimately depends on the trader's individual trading style, strategy and risk tolerance. Some traders may prefer even shorter time frames such as 1 minute chart, while others may prefer longer time frames such as 30-minute charts. It's important to experiment with different time frames and finds the one that works best for your specific trading style and preferences. Short-term traders. If you are a short-term trader who is looking to hold positions for a few minutes to few hours, so you have to use 1 minute or 5 minute chart. This 1 minute or 5 minute time frame allows you to see the price movements of the underlying asset in greater detail, which can help useful for identifying short-term trends and patterns. Swing traders. If you are a swing trader who is looking to hold positions for a few days to few weeks, so you have to use 15-minute or 30 minutes charts. These 15 to 30 minutes time frame allows you to see the price movements of the underlying asset over a long period of time, which can be useful for identifying longer term trends and patterns. Position traders. If you are a position trader who is looking to hold positions for several weeks to several months, you have to use daily or weekly chart. These daily or weekly time frames allow you to see the price movements of the underlying asset over an even longer period of time, which can be helpful for identifying major trends and patterns.